Not that you're divided attention. Okay. Evening, guys. Let me just remove this. Okay. Good evening, guys. Can you guys just confirm for me if you can hear me? If you guys can confirm for me if you can properly hear me, so that we can basically get started. You can confirm for me either on WhatsApp or via live chat there. If you can hear me, and if also you can see my screen, I have open with you here Nasdaq. What time frame is this? Nasdaq 15 minutes chart. If you can confirm for me if you can hear me and if you can also see my screen, I'd appreciate that before we can get started. So far, okay, great, man. Okay. Today, what do I want to cover with you guys today? What we spoke about yesterday, I spoke about the risk on, risk off. That's the title of today's. That's the title of today's. That's the title of today's video. I want to discuss something important with you guys. I always talk to you guys about you need to form a narrative when you come into the market. Okay, I'll show you this trade from today. I was watching it, but I didn't take it before we move on. So these are the type of opportunities that you will miss, and it's normal, right? It it was a good trade, but it just didn't give us a setup. Okay, we knew where it had to go, but there was no setup for us to. There was no entry setup for us. Okay, before we get into what we are going to discuss today, which is the risk off scenarios. I want to show you guys what happened this afternoon. Okay, so if you quickly switch to 1 hour before we move to the lower time frame, if we can switch to the 1 hour chart, if you guys can see, we had this level here labeled. Okay, I don't label it when I'm alone. When I'm trading alone, because I know what this is already. I know what is it that I'm referring to. No, this is not buy side. This is sell side liquidity. We had, what is this thing I'm showing? Okay, so earlier today we had these relatively equal lows over here. This low, this low, this low, right? If I can take my horizontal line, draw it from here to here, and template sell side liquidity. We had sell side liquidity over here, right? We had clear sell side liquidity, and price was basically just pushing lower and lower and lower, right? And it got to this point over here, and price got to this point, which is what I'm going to zoom into and show you guys in details what I was looking at while this thing was busy panning out. Okay. Now, at this point, obviously, this is Nasdaq. This is futures. I told you guys futures open at 8:30, right? I want to show you guys what happened at 8:30. But before I do that, I want to show you also. Yeah, before this big green candle happened, we had this buy side liquidity over here. We had this buy side liquidity, and we had this sell side liquidity, right? So what happened is that, can you see what time it is here? 8:30, around 8:30, but it was 8:33. Obviously, it's not always going to be exactly that time. But check, 8:33, price gave us a stop hunt low. From that stop hunt low, price shot up heavily, right? Price shot up heavily and took out buy side liquidity over here with this high, right? Price shot up heavily, gave us sell side liquidity with this high, right? It then pulled back into the range, right? Pulled back into the range and started consolidating, right? Pulled back into the range, started consolidating, right? Now, when I looked at this thing, okay, now this is why I'm saying fair value gaps. You need to know which fair value gap to use exactly, okay? Because if this is a stop hunt, I can clearly see that this is a stop hunt high at a specific time, which is 8:30 with futures market, right? Futures market open at 8:30, price shoots, gives us a spike to the bottom, shoots up, takes sell side liquidity, shoots up, takes buy side liquidity, and then pulls back into the range and leaves a fair value gap over here, right? Leaves a fair value gap, comes back, tests this fair value gap, and then shoots down here to take out what? Sell side liquidity over here and bounce probably at these levels over here. However, at that time, I'm not participating. I'm just watching. Okay, why am I watching? I can see that we pulled back into the range and left a fair value gap to the downside, meaning this is a bearish fair value gap, which is supposed to go down and help us take that sell side liquidity that we were looking for. But I did not sell over here simply because there was no what? There was no market structure shift, guys. Remember, we have market structure shift, market structure shift, right? A market structure shift is basically when we have a what? A break in market structure where we basically take out or break a swing low or swing high, right? This is when we break swing lows and swing highs, right? Simple and straightforward. There's no market structure shift over here. That's why I did not consider, even though we were in the right kill zone, right? But there's technically no trade. We have a stop hunt, and I do say on your system, on your strategy there, that you need to have a stop hunt. You need to have a what? a clear draw on liquidity. Our clear draw on liquidity was on the downside here, which was on the 1 hour chart. It was clear on the 1 hour chart. We had it down. We had a break. I mean, a stop hunt high, and then we tested, and then we had a fair value gap, and we tested the fair value gap, and we had what's this? By sell side liquidity that needed to be taken out, right? And then now this goes to the question that Tebucho was asking in the group this morning, as to how do you know? Because you can see that this thing closed above here, right? You can see that this green candle closed above this level, right? It closed above this level, meaning when it closed above this level, meaning this is a stop hunt. Yes, it could be a stop hunt. It could be a breakout to the upside, right? So how do you then know if this is just a stop hunt, or is price really going to continue going up? It's a breakout, right? In this example, even if you switch to the 1 minute chart, you will notice that we had no market structure shift. Yes, price pulled back into the range, proving to us that this was just a stop hunt, but there was no market structure shift, so there was no trade to be taken. Okay, price went on to consolidate. When it was consolidating like this, I was then no longer interested in taking this trade until 9:30. Okay, until 9:30. Now, if you take a look at this at 9:30, I didn't also think that we would break. I mean, we would come get another stop hunt at this high, but at 9:30 we got a stop hunt at this high over here, another one at this high, right? But then if you notice something, we also failed to do what? To take out these highs. I was watching this as it was happening. So at 9:30, I saw price taking out buy side liquidity, buy side liquidity, buy side liquidity. No, it's actually just two, because this one was already taken out. So it took out 1, 2. It didn't take these relatively equal highs, which was another buy side liquidity I was thinking it might take. Okay. So as soon as I saw it failing to take out this buy side liquidity and started basically shooting down and pulling back into the range, right? Price decided to do what? Shoot down and pull back into the range. I was like, okay, this is the 9:30 stop hunt. So this big candle shooting up, that was the 9:30 stop hunt. So stop hunt at 9:30, shoot down, right? Now, after it shoots down, it leaves this candle over here. I didn't like this trade anymore. I was happy taking this trade somewhere at these levels. But now, price came and look, 1, 1, 2, 3. This is our bearish fair value gap over here. This is our bearish fair value gap right here. This is our bearish fair value gap right here. Why am I using this fair value gap? Was I thinking, okay, this fair value gap is now valid? The only problem with this fair value gap was that after it came down here, look where I have this sell side liquidity line drawn. It's very close to it. So that's why I didn't have a lot of confidence in this trade, simply because of that. If it's the last thing that was missing, then that confirmed that this was just a stop hunt. This candlestick, this bearish candlestick, this one, this was a big move to the downside, doing what? Breaking a market structure, which is what was missing in here. So this helped us by breaking a market structure at this level, right? So once I saw this market structure break over here, I was like, okay, cool. Now it was confirmed that price is basically just giving us a stop hunt high and then shoots to the opposite direction, leaving a fair value gap. In a good market or in an ordinary market, this would have been our entry. Price would have shot down maybe a bit like this, consolidated here, came here at our entry, then shoots down and take our buy side, our sell side liquidity, and we would have sold here. We would have sold here at these levels, and price was basically going to go down with this. But it didn't want to do that, so we skipped the trade. Okay, we saw it. We saw where it's going to go. We saw the stop hunt high, so it gave us everything. It failed to give market structure here. And the reason why it failed, obviously, to give us a market structure at this level, as I was explaining, It's because it obviously was not done with the buy side, right? It obviously wasn't done with the buy side, which is why when the 930 candle opened, it took out the buy side liquidity again, taking people here and here, but leaving these ones over here, but leaving them as very clean highs as well, which means what? It's going to be a target again in future. Okay. I'm not sure if I'm losing you guys anywhere there, but that was just this afternoon's trade, and that's the reason why I didn't execute any trade today, because there was no clear setup. Well, honestly, the setup was there and it was clear, but there was no clear entry model. It didn't give us a clear entry model, and that's the reason why I didn't take this trade. Okay. If you guys have any questions, please drop them just now. Okay. If you have any questions in terms of what we've covered or what you'd like to cover, feel free to write them in our platform, or you can write them there on the live chat tab. Let me check if there's any questions. Nothing thus far. Okay, great. Now we move on to something else. Okay. I always say to you guys, when you want to trade, right? Let me remove drawings. You want to build or create this narrative as to why do I think that this thing is going to be bullish? Why do I think that this thing is going to be bearish? Okay. I normally don't just look at Nasdaq and say this thing is bearish. I don't look at, I need to have a couple of confirmations, right? As I said to you guys should know this by now also. This is Nasdaq. So Nasdaq, I paid with what? These move in the same direction, right? These are almost the same thing. I do not trade US 30, but US 30 is in here, okay, as one of the pairs that I analyze. So NAS 100, then it's going to be US 500 or S&P 500. No, why am I? S&P 500. These are the ones I trade, and then there's US 30. I never trade the US 30. However, it does move with the market. Okay, it does move with Nasdaq and S&P 500. So I just do not trade it because I don't like it as a pair. Okay, but these three usually move in the same direction. Usually have almost a similar pattern. Okay, so how you basically use these three is you will check which one is stronger than the other one on the upside. For instance, we have what you call an SMT divergence. We have what we call an SMT divergence, which basically means if you see US 500 and NASDAQ going up, taking out a swing high or whatever, and then you see US 30 going up and failing to take out that swing high, it means that US 30 is the better trade, is the better pair to trade at that particular time, simply because it's showing signs of weakness. But also, you need to do that when you already have your narrative, when you already have your clear drawn liquidity. Okay, guys, everything you do needs to come with the fact that you already have your higher time frame draw on liquidity. Okay, for instance, this is Nasdaq. On Nasdaq, for me to say, okay, besides those relatively equal lows, for me to say, and I think we discussed this on last week, if I'm not mistaken. Yes, we did discuss this last week. I said to you guys last week, and all these videos are there online. You guys can come check it out. When I saw price breaking down here, I said, I'm looking at price doing what? Coming to basically test this bullish order block, right? On the daily chart. So the daily chart has this clear bullish order block. Sell side liquidity over here. Sell side liquidity over here, right? Sell side liquidity, which has already been taken. If you look at this candlestick also, this is another sell side liquidity if you go on the lower time frame, which has also been taken. And just below that sell side liquidity, we have a bullish order block. Okay. What I then want to see now, I want to see price coming to this bullish order block. When I go to the lower time frame, when price gets to this bullish order block, I want to see price bounce here. And on the lower time frame, I want to see price basically giving me bullish signatures. Meaning, I want to see the 1 hour, 15 minutes going down, basically telling me that, okay, we are done with the downside. So we want to see maybe a shift in market structure to the downside at specific times, at specific levels, be it your order block, fair value gaps, and stuff like that. Okay, that's what you basically want to see, right? On the lower time frame, since you already know what you're anticipating on the on the higher time frame, which is the daily. However, this is also very important, what I'm about to say. If I see price maybe tomorrow or something breaking this level heavily, breaking this order block and continuing to the downside, then I'm changing. Remember, this thing is still bullish. This thing is still overall bullish. So if the market is bullish like this, if it gives these retracements or this, I'm anticipating that price goes to, it's going to retrace. Obviously, it's not just going to keep going up. But if it does this, then I'm anticipating that what is price going to do? It's going to go to discount the raise and basically start doing what? Buying and continuing with the uptrend. However, if it breaks this higher time frame, the bullish order block, I'm changing my narrative. I'm saying, okay, this order block has been violated. So if price closes up below, I'm saying this order block has been violated. So now what I'm anticipating that this order block maybe might be used as a breaker to do what? To come down and take out what? Sell side liquidity down here. Okay, so that's my anticipation. Break this order block, then my eyes will instantly shift to what? Sell side liquidity over here. Sell side liquidity over here. Sell side liquidity over here. Okay, that's what I'll be looking at if it breaks. However, for now, I'm still bullish on this thing. I'm anticipating that this level, this bullish order block is going to hold and price is going to continue going up and do what? Take out buy side liquidity over here. That's still my anticipation. Okay. However, I'm showing you this side of it just in case price decides to violate this level. Remember, we can only anticipate in the market, but we can never really be 100%. But we want to know when to accept the fact that we are wrong with our analysis. And I'm telling you now that you only accept that you're wrong with your analysis when you see these higher time frame bullish arrays being broken. Okay, if you see them being violated, you must know that, okay, price basically wants to start changing direction and possibly continuing with the down movement. Okay, now back to what I said we're going to talk about. Oh, I've already covered that. Okay, my what is this? Nasdaq, US 500 and US 30. You're basically wanting to move in the same direction in both cases. Okay, and if it happens that you see Nasdaq going up and the other ones are going down, you do not want to participate in a market like that in most cases. And I'm talking like literally going up and the other one's literally going down, not just the stop hunt. I'm talking about if this one is clearly pushing to the upside and the other ones are clearly pushing to the downside, you do not want to be participating in that market. You want to wait until these things start moving together. Okay, so you need to learn that patience. Now let's move on to something else. In most cases, what we want to see, right? In most cases, what we want to see, we always open the dollar index and analyze the dollar index. Okay. I want you guys, this is your homework. Okay. I want you guys to do this. I want you guys to open your dollar index. It's DXY on TradingView. I want you guys to open your dollar index. Okay. And then open Euro USD and open GBP USD. Okay. What you will notice is that the dollar index and these two pairs are a mirror image. They move almost exactly the same, but in the opposite direction. So if you see the dollar index going up, in most cases, 98% of the time, you will see Euro USD going down. You will see GBP USD going down. Okay, so that when I was trading, and I think I was holding sessions with you guys still, just not on YouTube. When I was still doing also Euro USD and GBP USD, I used to show you how you can use Euro USD to confirm your trade on GBP USD based on, which is basically the same thing with what I was showing you guys on the futures just now. Okay, we call that the SMT divergence. So you can use those two together, but only trading one. So you don't want to be opening a trade as a sell on GBP USD and opening a trade as a sell on Euro USD, saying you are risking 1%. You are not risking 1%. You're risking 2% because chances are extremely high that if you lose a trade on GBP USD, you are going to lose the trade on Euro USD. And you obviously cannot go in at the same time, buy Euro USD and sell GBP USD. That's like you are hedging. One is definitely going to be a winning trade, the other is going to be a losing trade. You understand? Because these things are like twins. Maybe not twins, but they move together, they move in the same direction. So you can't buy the other and sell the other. It doesn't make logical sense. Okay. However, when you look at the dollar index, if you are anticipating that the dollar index is going up, you must go on Euro USD and GBP USD and anticipate that actually these two are going down. Okay. So that's basically how you balance these two. That's basically how you balance these two or these three. Okay, so that's how the dollar index comes in or fits in. Now, a dollar index with the futures market on a normal market. Okay, now it's not always that this happens with the futures, which is your Nasdaq, S&P, and the stuff and the others. They are also supposed to be moving the opposite direction. So when you see a dollar index going up, you are supposed to see what is this? Your Nasdaq and your futures basically going the opposite direction. However, it happens that even today, you can see that they were moving in the same direction. The dollar index was bearish, as you can see, today's price action. The dollar index was what? Was bearish today. You can see this is the 20th. This is the 20th. Dollar index was bearish, right? The dollar index was bearish. We just analyzed Nasdaq and S&P 500. You guys clearly saw that it was bearish. So it's not always that it's going to happen, but I like it when I see the dollar index and the S&P 500 and the futures basically moving in the same direction. You moving against each other. This one going up, the other one going down. Okay, and it usually happens that if you see maybe the dollar index going up and you see futures also going up, at some point one of them is going to give in, where they're gonna basically start moving opposite to each other. It happens. Okay, so that's basically how it happens. As to when and how it happens, we obviously do not know, but you just need to keep track of the markets and see when such things basically okay. Okay, so I just explained to you guys three things, which is the dollar index and the euro and forex, which is Euro USD and GBP USD. I also explained to you guys the futures used with your Nasdaq, or sorry, your futures used with the DXY, and basically how they need to happen. I said three things. What else did I explain? I forgot. Anyways, we'll go back to this and check. Okay, and then now there's something else that you guys want to know. Okay, there's something else that you guys want to know. There's something else that you guys want to pay attention to. Okay, there's something else that you guys want to pay attention to. These these are government bonds. Okay, we basically call these yields, right? Which is basically your interest rates, right? We have the 5-year, the 10-year, and the 30-year. Okay, 5, 10, and 30. Okay, now what usually happens is this is what you want to see. In a market, when you see your interest rates going up, what does that mean? It means there's more money basically coming into that market. Basically, it's attractive to investors. But when you see your interest rates going down, it becomes less attractive. So you see people pulling out of that market. Okay, that's economics, right? So what you then want to see is this. You want to see your 5 years, your 5 year, your 10 years, and your 30 years. If they are all moving up, you are basically going to anticipate that the dollar is going to be strong. Okay. If your 5, 10, of which now they also move similar to US 30, US 500, and US 30, US 500, and US 100. Okay. They usually move in the same direction, right? So you basically use this as a confirmation. When you see your yields going up, you must anticipate that the dollar index is also going to do what? To gain strength and basically start going up, which means you need to see your Euro USD and everything against the dollar basically doing what? Going down, right? So if the yields increase, the dollar gets strong and the other currencies lose value. Does it make sense? If the yields increase, the dollar follows, and the other currencies that are against the dollar basically go the opposite direction, right? Which means the dollar is gaining strength. The other ones obviously need to do what? Need to lose value. Okay. The other one needs to lose value. And then we have the T bonds. These ones go the other direction. Like these ones go the opposite direction. So if you see the bonds doing what? Going up, you want to see the dollar doing what? Going down. So they are the opposite. They work like the Euro USD and they work like the Euro USD and the GBP USD against the DXY. Okay, so if you see the T-bond futures going up, you want to see the dollar index going down. If you see the dollar index going down, you want to see the bonds doing what? Going up. Now, if you can check over here, price has been doing what? Price has been doing what? Has been shooting down heavily. Can you guys see that? And if we move to the dollar index, you guys can clearly see that the dollar index is doing what? Going up. This is the daily chart on the dollar index. This is the daily chart on the future on the bonds. Can you see the inverse correlation? February 1st, price has basically been going down, right? Switch to the dollar index and go to February 1st, somewhere around here. This is the second. Yes. February 1st over here, price has been doing what? Has been going up. Can you see that? So they basically move the opposite direction. So when you come here, you analyze this thing the exact same way. There's nothing you change. You need to see your drawn liquidity. You need to see this. You need to see that. I'm not going to go into detail with how you need to analyze it because I believe that we've discussed that a number of times. Okay, so you want to be analyzing this thing. You want to see, okay, where do I think the T-bonds are going? Where do I think the dollar index is going? And these two must be in correlation. And then you open your yields. You look at your yields. Where do I think the yields are going? Right? If you think the yields are going up, then you must expect the dollar index to be doing what? To be also going up, while at the same time anticipating that your bonds will basically go down and the Euro USD and GBP USD will also go down, right? Now, if you see this, sorry about that. If yes, I lost my train of thoughts there. Sorry, I lost my train of thoughts there. But this is initially what I'm saying. This is how you use these things together. You need to see the dollar index going up. If you see the dollar index going up, you need to anticipate that the yields, or maybe you look at the yields. The dollar index you think is going up because of your analysis, clear drawn liquidity, bounce at a fair value gap, a discount or whatever. You look at your yields, your 10, your 5, 10, and 30 and 30-year yields, you see them also giving you confirmation that they're going up, while the T-bonds market is giving you confirmation that it's going down. Euro USD and GBP USD are also giving you confirmation that it's going down. You are in a perfect portfolio market. Okay. Now your job is to go on the lower time frame, because this usually happens on the higher time frame. You basically analyze this thing weekly, daily, 4 hour. Not you, we hardly really go to the lower time frames because we just basically use it as a narrative. We're not going to trade it. Okay. So that's basically how you come up with a proper or a complete narrative as to how do you then trade in these markets. I don't know if this makes sense, guys. I know it's getting a bit complicated, and it's getting a bit confusing to some people, especially those who are still new with this whole thing. But this is basically how you analyze the market and make sure that you're on the right side of the market on the higher time frame. Because if you're on the right side of the market in the higher time frame, it becomes easier for you guys to basically be on the right side on the lower time frame. Because if the higher time frame is telling you this and you go on the lower time frame and follow what the higher time frame is telling you, it becomes easier. Okay. It becomes much easier for you to basically, yeah. I don't know if you guys have any questions. I've shared with you guys what I need to share with you tonight. So just let me know if you got any questions so that you can have those answered. Okay. It's not that complicated, trust me. It's not that complicated. The analysis is the same. The analysis, in terms of the analysis, there's nothing you're changing. Absolutely nothing. You are analyzing the bonds and the yields and the dollar index the exact same way you are analyzing your Nasdaq and your Euro USD. You are analyzing them the exact same way. But then right now, what you're just doing is that you are just making sure that what the yields are telling you and what the bonds market is telling you and what the dollar index is telling you and what the forex market is telling you and the other markets are telling you is in alignment, basically. If they're aligning like that perfectly, it means you're in a good market to trade. And you just need to now go on the lower time frame and start basically looking for those entries. Okay. If you guys get any questions, just drop them for me on what on live chat, or you can drop them in our forum there, so I can basically have them answered for you. What questions do you guys have for me? I know I know this might be a bit complicated, but it's when you really apply it, you'll notice that it's not that complicated, really. It's not that complicated. Really, really, really not that complicated. It's just simple stuff. Simple stuff that needs you to basically practice and go over the markets, go over these things over and over and over. After a few months, you'll get it. After a few months, you'll get it. Um, I just ordered I think a camera and a mic on what's this? On Take a Lot. I ordered a mic and a camera. What's this? A camera on Take a Lot. This is just for the quality to be better, because now the quality of this thing is weird. I don't like how it looks. I don't like how it makes me look on camera here. It makes me look weird. So I take it you guys have no questions, and if you guys have no questions, then I'll go ahead and close this session and see you guys tomorrow. I'll be I think I'll probably host again when these things arrive, because now, yeah, just want to increase my quality here and do proper live streams. So I take it we have no questions. There's no questions on the chat box, and there's no questions on WhatsApp. So guys, please go practice what I just spoke to you guys about. It's not that complicated, and but it's actually very, very, very powerful if you apply it and you apply it in the right way. And another the nice thing again about this is the fact that you obviously do not have to implement this, or you need to look at this every day. The dollar index you need to look at every day. The dollar index you need to look at every day. You need to. However, when it comes to your bonds and your yields, you don't have to look at those every day. You can look at them just weekly, every Sunday. You need to have your analysis on Sundays, basically. Every Sunday, just make your weekly analysis. That's where you look at all these things, okay? And remember to journal your trades as well, guys. I've been discussing this journaling thing for quite some time now. Just journal your trades. Make sure that your trades are journaled all the time, okay? So that you can basically go back to them and study your setups. That's gold. Trust me. If you can do that, that's gold. Anyways, guys, this is remember this is just for educational purposes. It should not be taken as financial advice because we are not certified financial advisors. If you need a financial advisor, please contact someone that is legally certified to do so. Give us a like and subscribe notifications, and we'll see you guys on the next live session. Tomorrow is Wednesday. Let me just confirm something before I close. Tomorrow is Wednesday. We we do have fundamentals tomorrow. We do have liquidity that's going to be coming in the market tomorrow. So I will, depending on how busy my day is, there's this new thing that I'm working on. It's taking my fucking time. So depending on how busy my day is going to be tomorrow, at 3 o'clock, I'm basically going to host a live trading session with you guys. So just be on the lookout for that in case I do find time. And if there's nothing else, I'll see you guys tomorrow. Good night.